If you're tired of losing and overcomplicating your trading, do not worry, I've been there before too. That's why in today's video, I'm going to help you guys out and give you guys my exact 4-step simple trading model that made me profitable and helps me find easy, high probability setups every single day in the market. And today we're going to be going over an example of a trade I took today on Friday, August 1st. So let's get right into it. So the first part of my strategy is a fair value gap delivery and a liquidity sweep, right? So what does that mean? Imagine we have an uptrend, right? And we have some type of low inside of it, some internal low, and then I want to see us sweep it, right? Now, not only do I want to see us sweep this low right here if I'm looking for longs, but I also want to see us trading within or delivering off of some type of higher time frame fair value gap. So say we had a bullish fair value gap right here, right? We'll just write FVG. It's going to look completely terrible, but I don't care, right? So that's the FVG, and we swept a low inside of it, okay? Or we swept some significant swing low, and it doesn't have to be from a few minutes prior. It can be from days prior, right? As long as the low had been untapped up to the point you swept it, then you can absolutely look for longs in this area, and that's kind of how you develop the bias. And so I'm just going to shift down right now. So in today's context, we have been selling off a lot this morning, right? And so I'm immediately going to look for areas where I think we could get a bounce, because when we're making a big sell-off like this, we're going to be revisiting areas that we built bullish structure. That's just how a market works. And so under that circumstance, I was like, okay, let's see what type of fair value gaps can I expect us to trade into, or what can be of significance. And the first very obvious one that we hadn't inverted or really tapped into yet was this bullish 4-hour right here, right? So that was very important. And then the next thing you want to look for is a sweep of liquidity. And so that can be any obvious swing lows around the area. And we had swept this swing low from July 16th, right? It was a massive wick. It had gone completely untouched. We came down and swept it this morning after delivering right off of this bullish 4-hour gap that I just marked. And then we also swept these lows, or actually we didn't quite sweep them, but it was very close. Either way, we swept a swing low. That's all we needed. And you're automatically at this point giving yourself the context to say, okay, this is an area where I can expect buyers to step in. You chart this in pre-market, right? You see this bullish 4-hour gap, you mark it out, you look, okay, are there any type of swing lows in this general range, right? And you would mark this one, you would mark this one. And as long as we even sweep one of them, you can start to look for longs. And so that's what happened this morning. As you can see, I'll go to the 1-minute chart now, which is where I take my entries. Because what happened was we tap into this bullish 4-hour gap. So the second this happens, I'm already watching very closely, right? We sweep this low that I marked out, that swing low, that wick from July 16th. And so from the second market opened, I knew that I would want to long if price got down to this level. And now this is where it starts to really all come together, because we get this giant bearish fair value gap formed on the 1-minute chart. And that's going to have a lot to do with my entry, which I'll get to in a second. Okay, so right here, you can see we've swept this low. We are bouncing, or not bouncing yet at this point, but we are trading in this bullish 4-hour gap that I marked. So now, like I said, all eyes are on longs. Now look what happens. We have this bearish fair value gap right here, and at this point, we invert it. Now, what does it mean when you invert a fair value gap? It means simply that we had a bearish fair value gap right here, for example, and we close back above it in a bullish way with good momentum as well. Now, it doesn't need to have great momentum to be an inversion, but it does make it a good entry for my model, right? And so this can also work in reverse. Say you have, some type of bearish fair value gap right here. Say you end up, a bullish fair value gap. Say you end up coming down and selling through it instead of, coming down and retracing. That would be an inversion, right? That's a bearish inversion. So it works both ways. But this right here is a bullish inversion. Once again, it's an inversion because we literally invert the gap. This, in the 2022 ICT model, this fair value gap, is supposed to cause price to retrace back up to it and continue downward. But instead, we have buyers that are so strong at this particular level that we end up closing back above this bearish gap. And that right there is when I enter the trade, right? So I enter long. And I'm going to kind of show you guys the process of how I choose my targets, because we didn't end up hitting my final TP, but I still made good money off this trade, and I'll kind of get into it. So obviously, you guys understand, we'll go back to the 4-hour chart, that we swept this massive, significant swing low, and we were delivering out of a bullish 4-hour fair value gap. So you guys understand all of that by now, right? And so I'll mark it back out. We'll mark this one green so you can tell it apart. So we'll go back to the 1 minute now where my entry was right here. And then how do I set my targets, right? Okay, so the first thing is you need to know where your stop loss is going to be. Before you start getting greedy and thinking about your targets, you need to think, where would I exit this trade if it starts to go against me? And with an IFVG or inverted fair value gap setup like this, you always want to stop out on a close below the inversion. So you see this gap right here, you want to have your stop loss below this gap. Not on a wick down, but a close below. So, you know, you're going to get wicks under it all the time, right? You might get a candle that wicks all the way down, but you never close below on the same time frame. So say you enter because you got an inversion on the 1 minute chart, then you would stop out if you have a 1 minute candle close under this bearish gap. Not wick, close. That's a mistake a lot of people make, setting hard stops under these gaps. It's not going to work because a lot of times you will get wicked out. The market doesn't want to give you your move right away oftentimes. And so in that circumstance, you would probably miss the move. So let's go into it, right? And the targets, obviously, you have your stop set. You know where you want to stop out. You manually stop out if you close below this gap. And now what you're going to do is you're going to set some targets. Okay, well, we have some very obvious relative equal highs in this entire range. So I'm going to set my stop to break even the minute we hit these, right? Which is about a 1-to-1, right? But you don't really need to take profits here. It's just a measure of safety. Because a lot of times, if the inversion's good momentum, you're going to rip up to your other targets anyway, at least to your first logical target. But if the inversion's weak momentum and you can't even get past an internal high like this or these wicks right here, then you're probably not going to get good momentum at all and the trade's going to fail, which is why I set the stop to break even to save me in those cases. But so we get our entry right here on this candle close, and we have our first target right here. Now, why do you guys think my target's right there? That's the first price target for the trade. Why do you think? I'll give you guys a few seconds to pause and answer. The reason is because we have a bearish fair value gap right here, okay? And so obviously, if you understand fair value gaps, you know that a lot of times they can cause you a rejection, right? If you're trading back up to one. So I'm going to take some profits the second we tap into this gap. I'm going to have a limit sell right under it, right? Just to kind of be safe in case we do get heavily rejected off this gap. Now, this is another thing you can use for confluence. If you end up inverting this gap and you've got some clear skies ahead and you feel comfortable doing this, you can add the contracts back once you invert it because you have more confluence, right? Now, in this case, I wouldn't really recommend it because there's barely any space until the next gap, right? And then there's another obvious one right here. So this is a leg with a lot of gaps, which means you might not need to re-add if you take profit. But in certain scenarios, depending on the price action, you can absolutely limit sell some here. And then if we keep getting momentum and we invert this gap too, you can add to your position again. And it can actually be a very good tactic just to secure some profits because you don't know what's going to happen when you initially tap this. But if you limit sell here, de-risk, and then it keeps going your way and you have additional confirmation that you're going to keep rising, you can absolutely add in these scenarios. So I hope that helps you guys understand why I took this trade, what my target was. This was the first target. This was the second target, this swing high right here. I actually remember I also took a few more off right at the start of this bearish gap as well. So I had like 3 targets, right? One of them's about 1.5 to 1, the other like 2.5 to 1, the other like 3.5 to 1. And I would have kept some runners, but if you play this, we never really ended up getting to our final target, right? So we hit the stop to break even right here. We don't actually hit the stop loss, but we set it, right? So we entered here. We set our stop to break even the second we hit these internal highs. And as you can see, we never draw back down, so we never hit the stop. Right here, take some profit. We start to reject, take some profit at this first bearish imbalance. You keep going up a bit, right? And there's a little bit of chop here. And then, oops, I don't even know why it went that long, but this was the top, okay, to summarize it. I'll show you guys in a second, but yeah. So we took some more profit right here at the start of this bearish gap, and then we ended up not reaching this internal swing high, so I didn't hit my full target, and at this point I had moved my stop to profit, and it eventually ended up hitting because, as you can see, there was kind of an erratic move. Once again, I will reiterate everything. This model is literally free money. All you have to do is start with the daily bias, right? So I knew that we were trading down, and I marked this bullish fair value gap right here on the 4-hour chart. Now, you want to look for a significant swing low, especially if you're selling down and you're looking for longs. So I marked this wick right here from July 16th. Now, as you can see this morning, we swept it. And if you go to the 1 minute chart, that's where my entry comes in. Okay, so this was the trade I entered right here. We had a bearish fair value gap on the way down to this bullish 4-hour gap, right? So we created this bearish imbalance on the 1-minute chart, which is my entry time frame, and we ended up sweeping the liquidity from that swing low that I showed you. Now, you just mark this bearish fair value gap and you wait for price to rise back above it with strong momentum. As you can see, we do that right here, okay? And from there, you're just going to target the next bearish imbalance as your first take profit, and you're going to set your stop to break even once you hit the internal high. And as you can see, we hit internal high, stop to break even, we hit the first bearish imbalance, and boom, free trade. We never drew back down and hit our stop. Easy entry, easy money. That's all there is to it. So with that all being said, if you guys are still watching this video, you're probably serious about trading. And if that's the case, make sure to like the video and subscribe. Helps me a lot and goes a long way. And if you want to join my Discord for free, it's linked in bio. You can trade with me live every single day. And I post charts in there, post analysis. And like I said, I go live and share my screen while I'm trading so that you guys can learn from me and we can all learn from each other. So with all that being said, once again, thank you guys for watching this video. I'll catch you in the next one. Peace.